Morning everyone, I hope everyone is well. Look, a quick video following our investment committee meeting that we have quarterly. You might recall this took place I think the week before last, so we've since been discussing some outcomes and some actions and whatnot, but I thought a quick summary of that would be useful, hopefully. Remember too, this will be as brief as I can make it, but there is more information lying underneath everything, quite a lot of information, so if anyone's really interested in all of that, of course, just get in touch. I should first of all, as always, just remind you that this is general information. It will give you a picture of how we see things in a general economic sense, but of course that's applied differently to different people in their own circumstances. So, as always, please get in touch. Now, a quick summary. We came away from our quarterly investment committee meeting with our consultants, Quilla, with a couple of key messages, really, and namely that that geopolitical risk is probably the biggest thing that's fueling a few of the other messages, but that Iran conflict continues to roll on. We do think it'll keep de-escalating, even though there's of course these little spikes of volatility and spikes of activity and reactions and whatnot. But there's a view out there that the US administration will want to have this over and done with as fast as possible, with their midterms coming up towards the end of the year, and which makes sense, is logical, of course, but remains to be seen. Once that sort of starts to tail off, then we'll see a more stable environment for risk assets, shares, and so forth to recover more steadily in the absence of any other fires. There's one measure we watch that's a correlation between US stocks and US bonds, and that's a key indicator of growth. And at the moment, that's back in positive territory, has been climbing back up since the beginning of the year. And that dynamic points to a resilient growth environment, but potentially with higher inflation expectations. So logically, that sits with what we're seeing and hearing as well anyway. On the Australian front, one of the key views is that longer term inflation here looks to be quite stable or anchored, but the way things are heading at the moment, economic activity is fairly slow, and the pricing signals paint a potentially stagflationary scenario, which is to be watched. But at this stage, like I said, with longer inflation measures looking fairly steady, then we're not overly concerned about that, but keeping an eye on things. And probably the other big driver of the world's economy or the world's outlook is US earnings growth, and that's been revised. They've had a reporting period recently, and that was very positive. So again, that's driven a lot by the tech stocks, but those tech stocks are not just necessarily investments in the tech producers, but the fact that that tech is being incorporated into more businesses, making them more efficient and better valuations. So anyway, overall it paints a fairly overall positive position, and that's still the way we're heading into things, which is largely unchanged from our last few quarterly meetings, after which I've done videos like this. So if you remember that likelihood sort of economic scenarios I try and describe to you, we're still very much in that middle scenario, 50% likelihood. You can never be sure exactly what's going to happen, but we sort of put a 50% likelihood on that muddling along scenario, below trend growth, patchy economic performance around the world, but overall quite steady. On the negative side, this is unchanged from 3 months ago, our last review 3 months ago, that tail risk scenario, which points to sort of the gloomy end of things, where a number of major economies go into recession and the war drags on indefinitely or worsens, and that scenario there, we've got about a 15% likelihood on at the moment. And then the other end of the scale, the very optimistic end of the scale, where the trade turmoil, the tariffs and whatnot settles right out, the war finishes and ends, and things get on, and growth improves around the world's economies. That again is the optimistic end, but we think that's around 35% likely. So another way of thinking of that is we think that okay or good is 85% likely to be the case. So again, that paints a pretty obvious picture about being over in an overall sense being optimistic. So really that's probably the main message I wanted to get across. Like I said, I've summarised it quick as I can, still hit 5 minutes, but there's a ton more information underneath. Anybody who's really interested in drilling down just needs to get in touch. Otherwise, again, as I always say, really all of this flows into a meaningful useful application when we continue to have our chats, and everyone's pretty good, at keeping review dates and whatnot. So, anything else on your mind, all you need to do is get in touch. Don't wait for a meeting offer. But, anyway, I hope everyone's well. I hope that was useful, and be in touch anytime you need us. Talk soon. Thanks. Bye-bye.